Grant White, portfolio manager, investment advisor at IA Private Wealth, and Grant, you're a shareholder of TD. What do you think? Is there opportunity here, given how beaten up the name has gotten so far this year?
Yeah, good to see you again, Amber. I think that this is one where it's a little bit too early to say for me. I hate uncertainty around, especially Canadian banks, because the reason why we tend to own them is because we want such consistency. We want to feel like we're safe in them. And when I see this level of uncertainty around the future of a Canadian bank, especially a large one, with TD, that gives me a little bit of pause around it. Now, we are shareholders in it, as you point out, and we have been for quite some time. And so we're not planning on selling off our position by any means, but I think that given what's going on and the fact that we're still not quite sure what the results are going to be in the US, which is a major part of the reason we own it in the first place, I think that at this point we're happy to stand on the sidelines, continue to own, and wait things out.
It's interesting that you mentioned some of that, the issues that they're having on the regulatory perspective. In many ways, there's no way to get an edge around it, right? It's just like either it happens or it doesn't happen, and TD is being very tight-lipped about it. So investors have chosen to obsess about maybe other things like CEO succession. Does that meet your level as an investor of things that you're potentially worried about, or is that kind of more on the fringe?
I would say that I wasn't worried about it. I think I was on the air a few months ago talking about TD, and I wasn't worried about it then. But, after this whole story is continuing to unfold in the U.S., it caused me to look a little bit deeper into the company and looking back over the last number of years. And I would say that not that we have felt badly about where things have gone under Masrani, but I think that at the end of the day, it's wise to have a plan going forward and give the investors certainty around it. Certainly the executive team there is looking for it, but as an investor of the company, we do want to know where the pathway is going forward and what things are going to look like. And so it's become more of a concern in recent months. Now, part of that might just be my angst about what's going on in the U.S. and the fact that there still seems to be a veil of uncertainty around that. They're pretty hush on it. I thought this was going to be washed under the rug basically a long time ago. At this point, the fact that we're still talking about it gives me a little bit of pause that maybe it's a little bit bigger than what we originally thought. And for those reasons, I also would have some questions about leadership going forward.
And let's just take a look at your bank exposure in general, because there are nuanced issues with TD, but then there's a bank sector. Generally, the large banks have struggled, though it's interesting, the most domestic of them have outperformed. National hitting record highs. It's up nearly 10% this year. Which, to your point, so many people come on and say, oh, I like the Canadian banks that have U.S. exposure, not the ones that stick close to home. How are you thinking about the sector right now?
Well, I feel kind of bored about the sector, to be honest. I think it's a great, don't get me wrong, I think it's a great sector, and I think it's a really great core holding, if you will. The reason, you're right, National Bank, I think, is a fantastic company. They're very well managed and have been for a long time. And frankly, we haven't been an owner of it for a long time either, but just because we didn't see the growth opportunities there. Now, in the short run of things, and we're talking the short run over just a few years, certainly that's hurt us in the sector. But I still think that the bigger growth opportunities are either down south or in other jurisdictions. And so for those reasons, I still love the banks that have a little bit of a better foothold in the U.S., which again gives me some concerns about TD going forward, because I think it might cause us to change our thesis on it. But given that, it's still a good sector. We are planning on holding it. We're not adding, though. We are just planning on holding at this point. We're happy with where it's at, and we're happy to clip dividends.
Now, we're getting through U.S. bank earnings season. We've heard from the majors. We've heard from some of the regionals, when I think performance has been inconsistent. And we've heard from the ones more exposed to capital markets, like Goldman and Morgan Stanley. And it's interesting, the reaction has been to sell, a JP Morgan, for example, sold off hard on the back of its quarterly results. Does that concern you, the reaction that we've seen from some of the big money center banks?
No, not really. I mean, I think that's truthfully, I think that's overdone. I think that that's more of a sense that things have been good for a while, and people are looking to take some profits off the table in certain cases, especially. Frankly, I still think that there's a lot of runway ahead of a company, especially like JP Morgan. I know there was a bit of disappointment in the earnings report, especially related to forward guidance. But in saying that, I think that the companies that are well diversified, the banks that are well diversified, and especially with more exposure to capital markets, are going to do quite well in the next 12 to 24 months, let's call it, and probably beyond, but for the short run. And for those reasons, I mean, especially comparing to the Canadian banks, I still like the opportunity a lot better from a JP Morgan than I do from, let's say, a TD. I just think that there's more opportunities there. I think there's better growth, brighter growth opportunities. Let's
contrast the sector with Lifeco's, and I know some people say that's a bit of a false option. You can own potentially both, yeah. But Lifeco's have done very well in this higher for longer environment. Recently, the Lifeco's have underperformed the banks over the last month. Do you have a view on whether the Lifeco's can continue to outperform here?
Well, I certainly like them if interest rates remain higher for longer, and that's more of the story that we seem to be seeing because they've been so depressed for so long in a low interest rate environment. I think that this is to your point, this is a great environment for them. They haven't seen this in almost like 15 years, 14 years, and so I like their opportunities now. I see that a number of them are starting to take better advantage of it. From the wealth management industry side, I mean, we're seeing new product lineups coming out, and I think the Lifecos are pretty excited about where they're at, and so I think there's a lot of growth opportunities there. So if interest rates remain high, which I think that they will, higher for longer anyway, then yeah, I think there's a good environment here for the Lifecos. I also think it's a bit of a sleepy industry though too, and so I wouldn't be banking on the fact that there's going to be a massive amount of growth here, but I do think that what you're seeing from the Lifecos in terms of yield and dividends, that's pretty safe, and if you like that, then I think they're a good option to be in, especially a company like Power Corp. We still love. We've owned it for a long time. Haven't added to it in a long time, but it's been a good stable core holding for us.
Grant,